Are you tired of the guesswork in Forex trading? Get ready to unveil the secret weapon that professional traders use to predict market movements with precision: Forex fundamental analysis. Welcome to this comprehensive guide on the fundamentals of Forex fundamental analysis. In this video, we'll embark on a journey to demystify the world of fundamental analysis, breaking down essential concepts and tools that can help you gain a deeper understanding of the economic forces driving currency markets. Whether you're a newcomer to Forex trading or an experienced trader looking to enhance your analytical skills, this video will equip you with the knowledge you need to navigate the Forex landscape with confidence. Please don't forget to like, share, and subscribe for more informative content on Forex trading and other financial topics. So, let's jump right in. Introduction to Fundamental Analysis. Fundamental analysis serves as a cornerstone in understanding the intricate dynamics of the Forex market. This method provides a comprehensive lens through which traders can assess the ebbs and flows of financial markets, guided by a profound exploration of economic, political, and societal factors that possess the potential to exert substantial influence over currency values. Unlike its counterpart, technical analysis, which meticulously dissects price patterns and historical data, fundamental analysis immerses us in the tangible realities of the global stage. Fundamental analysts are akin to economic detectives, diligently scrutinizing real-world events and conditions that reverberate through a nation's economic landscape. These dedicated analysts grasp that a nation's economic health stands as the linchpin to understanding its currency's intrinsic strength or vulnerability. In essence, fundamental analysis delves into the core driving forces of the currency market, unraveling the intricate interplay between various factors that mold the financial world we traverse. By arming ourselves with the insights garnered from fundamental analysis, we embark on a journey that empowers us to decipher the economic narratives underpinning currency movements. It allows us to peek behind the curtains of price charts and technical indicators to witness the profound and often profound impact of real-world occurrences. This foundation of knowledge equips traders with a deeper understanding of why currencies shift as they do, enabling them to make informed and calculated trading decisions amidst the ever-evolving global financial landscape. Key principles. Before we dive into the tools and techniques of fundamental analysis, let's explore some key principles. Economic indicators. Economic indicators, such as GDP growth rates, employment figures, inflation rates, and consumer sentiment, provide vital insights into the overall health of an economy. These indicators help traders gauge whether a country's economy is thriving or facing challenges. Interest rates. Central banks play a critical role in shaping a currency's value through their monetary policies. Changes in interest rates and monetary policy decisions can have a profound impact on a currency's attractiveness to investors. Geopolitical events. Political stability, trade agreements, and international conflicts can influence a nation's currency values. Geopolitical events can trigger volatility and impact currency markets. Market sentiment. Traders often react to news and events based on their perception of how these factors will affect currency values. Market sentiment can lead to short-term fluctuations. Key economic indicators. In the realm of fundamental analysis, a firm grasp of key economic indicators is paramount. These indicators serve as the compass guiding traders through the labyrinth of economic data, offering valuable insights into a nation's financial health and its currency's fortunes. Let's delve deeper into some of the pivotal economic indicators that command the attention of traders worldwide. Gross domestic product. GDP stands as the barometer of a nation's economic might, measuring the total value of goods and services produced within its borders. For Forex traders, a growing GDP often translates into a stronger currency. The rationale is straightforward: a thriving economy tends to attract investment, bolstering demand for the domestic currency. Employment figures. Data on employment levels is a crucial piece of the economic puzzle, offering a window into a country's labor market and overall economic well-being. Indicators like non-farm payrolls and the unemployment rate unveil trends in job creation or destruction, providing insights into the strength of an economy. A robust labor market often correlates with a robust currency. Inflation rates. Inflation, the gradual ascent of the general price level of goods and services, is a force to be reckoned with in fundamental analysis. A high and volatile inflation rate can erode a currency's purchasing power, undermining its appeal to investors. Central banks, tasked with maintaining price stability, aim to keep inflation within a manageable range. As such, inflation rates and their stability can significantly impact a currency's value. Interest rates. Central banks wield interest rates as a potent tool to navigate economic waters. The correlation between interest rates and currency strength is profound. When a central bank raises interest rates, it entices foreign capital seeking higher returns, thereby strengthening the domestic currency. Conversely, lowering interest rates can make a currency less attractive to investors. Hence, interest rate decisions and monetary policy changes are closely monitored by Forex traders. Trade balance. The trade balance, the arithmetic difference between a country's exports and imports, carries profound implications for its currency. A trade surplus, where exports surpass imports, can infuse vitality into the domestic currency. The reasoning behind this lies in the influx of foreign currency earned from exports. This not only bolsters a nation's coffers, but also underscores the appeal of its currency. These key economic indicators, amongst others, act as the heartbeat of fundamental analysis. Traders, akin to economic sleuths, dissect and interpret the data released for these indicators, seeking clues to the underlying economic narrative. Armed with these insights, traders are better positioned to anticipate and respond to currency movements driven by shifting economic landscapes. Understanding the intricate interplay between these indicators and currency values equips traders with a foundational pillar of knowledge that can fortify their trading strategies amidst the ever-fluctuating tides of the Forex market. Trading the news. One of the fundamental analysis strategies traders employ is trading the news. This approach involves capitalizing on market movements triggered by significant economic events and announcements. When key economic indicators are released, traders often react swiftly to the data, resulting in price fluctuations. Impact of news events. News events can have varying degrees of impact on currency markets. High-impact events, major economic indicators like GDP, interest rate decisions, and non-farm payrolls often lead to significant market movements. Medium-impact events. Events like consumer sentiment reports and housing data may cause moderate price shifts. Low-impact events. Some events, such as weekly jobless claims, may have limited impact on the market. Sentiment analysis. In addition to economic data, sentiment analysis plays a crucial role in fundamental analysis. Sentiment refers to how traders perceive and react to news and events. Positive sentiment can drive a currency's value higher, while negative sentiment can lead to depreciation. Tools for sentiment analysis. Traders use various tools to gauge sentiment. News sources, monitoring news outlets and financial news can provide insights into market sentiment. Economic calendars list upcoming events and their expected impact, helping traders prepare for potential market moves. Conclusion. In conclusion, fundamental analysis is a vital component of successful Forex trading. It equips traders with the ability to understand the broader economic forces shaping currency markets. While it complements technical analysis, fundamental analysis provides a deeper understanding of why currency prices move the way they do. By keeping an eye on key economic indicators, interest rates, geopolitical events, and market sentiment, traders can make informed decisions and adapt to the ever-changing landscape of Forex trading. Whether you're a short-term trader reacting to news events or a long-term investor considering the fundamental health of a country's economy, fundamental analysis is a powerful tool that can enhance your trading strategy. Thank you for joining us in exploring the basics of Forex fundamental analysis. If you found this video helpful, please like, share, and subscribe for more informative content. Happy trading!